Hey, it's 1 o'clock in the morning on Friday, so it's the 18th, and a little while back I made you a video on YouTube called the Emini S&P's Next Move based on the sun. And I want you to look real quick here because at the time I had described to you that we would be moving down from this pattern 5 until we got to a new low, which would be a pattern 4. And you can go back and look at the video. I'm about 58 minutes into the YouTube video that I made for you. There's me, that handsome, bald, chubby guy down there in the corner. Ladies, I am off the market. Sorry to say. But I want you to see what happened, and I told you which day those things would be occurring. In fact, there's a red triangle right here, and there's the double lines that we were talking about. And I pretty much said when we get to the end of the road here, we would be looking at a brand new low, and that would be a pattern 4. Well, here we are, and it's Thursday, Friday, like I said. And lo and behold, saints be praised, look at what took place. There's the brand new low that I told you about earlier, right here. Now, in relation to that, there are definitions for the pattern that I taught you about, and it's called a pattern 4. I just want you to see real quick what usually happens when we get to a pattern 4. Okay, so in relation to what's on the screen right now, you'll see that we have a prior swing. There's our prior swing low, the one I talked about in the video. Then we have a brand new low on either the selling pressure candle, the one to the left of it, or the one to the right of it. So the selling pressure candle, the date that we were waiting for the big drop, was here. But where it closed is super important. Where it closed is super important because that wick, that low rather, where the low is lower than the previous swing low. Now, take a look at the pattern here and you'll see that's the very definition of a pattern 4. And this is a pattern that the banks use, a play that they run to suck traders down into a short position, trap the short traders, and then reverse it. Little expenditure of cash and energy causes a stampede, a panic, everybody goes the other direction. Cats marry dogs. It's panic in the streets. When this usually happens, though, look at what we usually see. And this is a diagram from a chart that I screenshot probably 18 months ago. And it looks like a 5-minute chart, 1-minute chart. So here's the pattern on a 1-minute chart. And here's the pattern on a daily chart using solar cycles of all things. And there's the completion of that downward 5 move. Now, NinjaTrader has this wonderful new feature where you can't center text over an arrow unless you do 95 different steps. So, of the 500 user-driven improvements, one of them is not being able to center text under a bar. Okay, so here's a pattern 4, here's a pattern 5. This establishes two things for me. Number one, the new support line is right here at the close of that candle. So if we pull this thing up, I want you to see that there are now 3 support lines here, ranging from 428 3/4 to 432 1/4. So it's a $4 range. Okay. Now, the second thing we know is that the bottom of the range right now, check this out, the line that we just drew, the closing price of that pattern 4 is here. Big bright red, right? And the closing price of the pattern 5 is here. Let's make that a little bit brighter. There we go. So this red line down here and this green line are defining a range. When you see a pattern 4 and a pattern 5 like this, back to back, you will generally create a consolidation zone. The banks drove price up to a certain point on purpose and then drove prices down to a certain point on purpose. Okay? So there are actually a few things here to watch for. When you have a pattern 4, I tell my customers on the lowest time frames, look for a 2-tick move below the low. So right now the low of this candle is 423.75. I think it's safe to say we can put that 2 points below 421.75. So if the market breaks that low, the trend is expected to continue down. We've got one more day here in that pattern 4 pattern here, the one that I just showed you. And I want you to see that that third candle can also drive a new low down. So we got to watch tomorrow and see. But as of right now, the way the pattern is formed, this trend would be considered a trend continuation downward if it broke underneath that low. And I'd say 2 points as opposed to 2 ticks is probably a safe bet. Now, the other thing to remember is when you have a 4 and 5, halfway in between those two things becomes a critical level. And in here, I'm going to just look at that 50%, and we're going to give it an obnoxiously bright color so it stands out. Let's make it snow, and we'll make it thick, just like the other two lines. So halfway in between the high and the low of this 4 and 5 is 24.54. A very high percentage of the time that we have a 4 and 5 range like this, the market will minimally return back to the 50% of that zone. Okay? So we're looking at buying pressure down here from 412 into 421, and we're looking at it, the first resistance area coming in here, 453 into 458, that $5 range right there. There's also a very curious thing that occurs in regards to the next signal that's coming up. Remember, we have these gaps, right? We have these gaps that we've been using to track when the next cycle is coming. And so the next cycle is coming in the future. When we get there, it's not going to be a red triangle. It's going to be a green one, right? They oscillate. Green, and you can see what the signals have been so far using this method. Green to red, green to red, green to red. And they've been pretty consistent right now. And when we're snapping into a pattern 5 and then into a pattern 4, these generally occur near trend reversals, right? These generally precede a pattern that looks, let's see if I can find it. You have the lower low and then the higher high into that period, but you'll also have, let's see if I can find the diagram. Yep, it'll definitely be here. These 4 and 5s can precede a pattern that looks like this, a distribution pattern. Okay? When you have 5s and 4s, you'll generally find the market goes into a distribution pattern in an uptrend, and you'll have consecutively lower peaks, a breakdown, and a throwback. And so that's starting to happen up here, the 5 and the 4, are the banks driving it up unnaturally to that higher high and then driving it down unnaturally to that lower low. This is a stop run tactic. This clears the board. This gets the weakness out on that end, and it gets the weakness exposed on this end. And the middle ground is where people are going to get chopped to death. Chopped to death. But this next signal coming up, here in the future, that's going to be a buying pressure signal. And inevitably what happens with a back-to-back, not inevitably, but many times, when you have a back-to-back inversion, there's a really neat effect. You have a higher high with a pattern 5, then you have a lower low with a pattern 4. So there's a green dot up here, and then there's a red dot down here. And then when you get to the next signal, many times it will snap back into phase. So the third signal, when we come into the next green dot, if a back-to-back inversion is in fact what's happening here, the next one will be a pronounced and radical move up in all likelihood. So the first one is a reversal in the opposite direction. The second one is a reversal in the opposite direction. And then when you get to the third one of this pattern, it's like a rock being thrown into a pond. There are ripples, and then eventually the ripples spread out, and then the lake calms down and it's like glass again. Here's your first ripple, here's your second ripple, and here's the calm. So we're expecting, coming into the next buying pressure signal, another push. Another buying pressure push up. But that won't be here until we get to this next green line. So we're going to keep our eye on this. I did want to celebrate, however, that I told you this was coming. I did want to remind you that I told you it would be below here, more likely than not. We have gotten to this. The sequence is now locked in. We are following it, and we understand when we see the sequence what we generally expect when we get there. It is a pure pattern 4 as of right now, and so we're watching for a move back up into the 50% area, 24.53.19 on the chart. Hey, we do these analyses for you because we want you to benefit from our knowledge. If you'd like to join us each week and understand how you can learn to predict when the banks are most likely to do the things that they're going to do in the future, the ability to understand where the landmines are, to know which dates, which times of the day are higher than average probabilities, up or down in terms of movement and direction, then there's a link in the description below. You can take our video demo at our website. You can also use any one of the signals, or the links rather, to join us for our weekly webinars. So if you're getting anything from these videos, I would strongly encourage you, head on over to our website, click on that video demo button, and get involved. We want to teach you what we know. We want to show you what we've learned, and we can do it in any market: futures, forex, equities, options, commodities. Be our guest. I'm Michael with BackToTheFutureTrading.com. If this has been educational for you, if you've enjoyed what you've seen here, please like and subscribe and comment down below, and we'll see you in the webinar. Take care.